Do you want to know how to qualify for the biggest house you possibly can? To see how, let's take a look at a buying power chart. If you've never heard of one before, it's a chart that easily breaks down how much you can qualify for depending on the rate a lender can give you. On this column is the purchase price, and on this row are the different interest rates. In this example, we are looking at a buying power chart for a $400,000 property with a 6.99% interest rate and a client who can afford a maximum of a $2,660 a month principal and interest mortgage payment. As you can see, that's where all three of the figures meet on our buying power chart. And we're going to assume that this is the lowest rate a mortgage broker could find you based on your credit profile, your loan to value ratio, etc. Rates change daily, so these are just hypothetical figures. But this is meant to show you the difference between someone like a mortgage broker who is able to help clients shop and able to help you find the lowest possible rate versus a retail lender or bank who might only have higher than average rates, limited loan products, and no option to shop. As we scan to the higher rates, you can see how the payments increase. When we get all the way up to a 0.75% increase in rate, the payment for this borrower would be $205 more a month. But assuming our debt to income ratio caps us at a $2,660 mortgage payment, we have to follow the green block down to see where a retail lender or bank might leave our pre-approval amount. With just a 0.75% increase in rate, we can now see that this borrower would qualify for $29,000 less than they would with a mortgage broker or someone who could find them the lowest rate. True story, when I worked at a company that was essentially a retail lender, they actually used to coach us to say that we're all fishing from the same pond. They would tell us to say that anytime a client would ask if there are any other lower rates out there. As much as some lenders might make it seem like rates are the same no matter who you go with, that's simply not true. As a mortgage broker, I have access to over 150 different lenders' rate sheets, and I can tell you that some lenders are a lot cheaper than others. Now, like any product, using the cheapest option isn't always better. In mortgages, there's definitely some cheap lenders you want to avoid because they have lender overlays with unnecessary conditions. Some can take over a month to close, and sometimes they can't close at all. But it's a mortgage broker's job to vet those clients for you, to help you choose the best combination of fast, cheap, and most reliable lender for your unique situation. So if you have a pre-approval letter and you want to see if you can boost your pre-approval amount, or if you just have any questions at all about how much you qualify for, I'm only a call, text, email, or social media message away. So feel free to reach out.